The 2020 hurricane season was so bad, the National Hurricane Center ran out of letters in the alphabet.
Hurricane Delta. It's the first time we've ever gotten to the Greek alphabet.
This year, 29 named storms.
Hurricanes bring high winds and treacherous rainfall.
2 residents we speak to say it still looks like a bomb went off in their town.
But often the most damage is caused by flooding.
It is the largest natural catastrophe that we have. It's happening all the time.
I could take you outside my house right now. It's flooded from the king tides. We've had 3 major floods in the house. 2 of them we've had major claims.
Even just a little bit of water can devastate a home. FEMA estimates 1 inch of floodwater can cause up to $25,000 in damage.
It's mid-intensity storms that park for long durations that are being the facilitators of the most catastrophic losses.
With sea level on the rise and increased storm severity, all Americans are at risk.
If you live somewhere where it rains, you need flood insurance.
However, flood insurance is inherently complicated.
Arguably, if the insurance costs were higher, perhaps people wouldn't be living in such risky areas.
Congress created the Nationalized Flood Insurance Program, or NFIP, in 1968 to help Americans facing flooding.
At the time, there was no other insurance for flood that was available in the United States.
The application and underwriting process with the NFIP is very tedious, and often the claims paying process is slow.
The NFIP is over $20 billion in debt to the U.S. Treasury.
This line on the map, the 1% annual chance line on the map, has had unintended consequences.
Could the private sector provide a better model for flood insurance? And did governmentally funded flood insurance encourage dangerous practices? 14.6 million properties in the continental U.S. are at a substantial risk of flooding in 2020. In 2019, 93 people died directly due to flooding in the U.S. You can check out your risk at floodfactor.com, but experts say almost every home is at risk.
We are seeing more severe floods, more severe hurricanes, more severe wildfires. Why? Most of the time it's because more people are living in harm's way.
Folks think that they're not at risk and that they don't need a flood insurance coverage, when clearly 30% of our losses in any particular year happen in the low to moderate risk area.
Take, for example, Florida, the nation's 3rd most populous state and 5th fastest growing state in the U.S., with a growth percentage rate of 1.5%. Once the pandemic hit and remote work became the norm, even more people started flocking to the Sunshine State.
My name is Kurt Dyer, and I live on Miami Beach, Florida. I've lived here for 30 years. I love Miami Beach. I instantly fell in love with it. It's a beautiful town, friendly people, great food, beautiful beaches.
Florida is one of the top 2 states facing the biggest substantial flood risk, and that risk will only continue to grow over time.
The first flood that we had in 2009, we literally had the little bedroom and bath, and they were completely underwater. We have 4 steps going up to the kitchen from the guest bedroom. The water was up to the top steps. Washer and dryers, of course, were floating in the garage. We lost our water heater. We lost the central AC that we had just put in. We lost, I had fish floating in the pool from the bay. We had parts of a boat dock washed up into our front yard. It was quite dramatic. I was devastated, absolutely devastated. It was just a shock. But when you see water in your house, it's devastating. You know, it's a miserable feeling. You know, you get a check. Luckily, I'm fortunate enough to have insurance and I can afford to pay for it. A lot of people don't, but I wouldn't have considered buying anywhere else. I mean, I love Miami Beach. I wanted a house.
We've seen a lot more of not just storm flooding, but a random rainy day flooding too. Part of it is due to building. You know, the more we build, the less ground there is to soak up the rainwater.
Unfortunately, most people don't think about risks when they're purchasing property. They just look at a beautiful barrier island or a beautiful forest in California, and the risk doesn't come into play for them.
I had no clue this house flooded when I bought this house. And the seller nor the realtor disclosed it. But I have no regrets, you know. I just need to take care of the situation, that's all.
cities like Miami and New Orleans will likely experience the most sea level rise flooding, which may in turn cause mass migration away from there if the residents are concerned about the flooding. However, that is not always top of mind.
Most of the time, people don't think they need it. Sometimes even people think they already have it. That's a big misinformation in terms of flood insurance because most people think it's part of their homeowner's policy when it's not.
In 2018, only 15% of American homeowners had flood insurance. 60% of Floridian homeowners did not have flood insurance when Hurricane Irma hit. Federal grants, loans, and flood insurance payments to Florida following the storm have totaled over $5.8 billion.
It's estimated that 80% of the damage to all impacted areas was not covered by flood insurance.
Conversely, those who do purchase flood insurance may feel emboldened to live in riskier locations. A mortgage lender may require flood insurance, but since that can be provided at a relatively low cost thanks to the NFIP, people don't assume the full risk for living in a dangerous location.
We're causing a false incentive on people to live in riskier areas, and really the cost then spreads throughout the government and to all Americans and taxpayers.
And prior to 2012, flood insurance premiums were kept artificially low because people with homes built before the NFIP was established were not required to purchase flood insurance.
It has affected mostly the pre-firm homes. A lot of those homes have been receiving a subsidiary.
Congress then created a group of people, about 20% of the policies, that are discounted. So by law, they pay less than their full risk rate.
So a lot of people think, I don't have flood insurance. If I have a flood, it's okay. FEMA will just, give me money. It's not how it works. In order to be eligible for the FEMA grants and everything, you have to be a part of the NFIP.
In 1968, the NFIP, or National Flood Insurance Program, was created.
It has the fundamental structure so that we, yes, make insurance available, but we do a few other things with the National Flood Insurance Program.
In 22,400 communities, we have approximately 5 million policyholders, write $1.3 trillion insurance coverage in those communities, generate roughly $4.5 billion in revenue. So it's a multifaceted government program that has a number of very important objectives.
There's different branches of the NFIP. There's the flood insurance branch, there's floodplain management, as well as coming up with the flood insurance rate maps, which are used in regulation and currently in rating of insurance.
NFIP insurance costs about $700 per year, or about $2 a day. For residential properties, it covers up to $250,000 of damage to the building and $100,000 for building contents. It also requires a 30-day waiting period, so participants must sign up ahead of a storm coming their way. Some stakeholders see the NFIP insurance as flawed.
So if you live in a home that's $400,000, and you only bought a $250,000 limit and the home was flooded, it poses the question, what do you do?
The second responsibility of the NFIP is tracking flood risk using the floodplain map.
They determine your price for your flood insurance by two main factors. One, what flood zone you're in, and then the height of your home. When I say height, the elevation in comparison to what they determine to be your 100-year flood event. There's 3 different flood zones. There's a flood zone X, where you're not being forced to purchase flood insurance through your mortgage company. And then there's 2 other flood zones, flood zone A, which is a proximity to water, and then flood zone V, which would be on the water, where you have the potential for storm surge.
The flood insurance rate maps were very good for the time, but currently with the flood rate maps, all risks in the same zone with the same elevation and the same building type are rated the same.
The NFIP intends to release a new mapping plan called Risk Rating 2.0.
We know more about flood risk now than we did when the current rating methodology was put in place 4 decades ago or so. And so now, because of technology, because we understand the risk better, we can create a rating methodology that identifies what the risk is on a property-specific basis instead of a zone basis.
It's going to be a little bit of a switch up. Some people will probably see increases as other people see decreases, but it'll be more balanced overall.
Communities are the third dimension because they have to adopt land use ordinances to manage their floodplain.
Communities need to fulfill the requirements and show that they've actually adhered to and are making progress in terms of making themselves more flood resilient.
FEMA is very good with working with communities to help them bring their codes and ordinances up to meet the NFIP standards.
Some examples of improvements could be:
elevate your house if you're in a flood zone. Don't put enclosures down below and convert them into living space. Allow for water to freely flow on that bottom level.
Our insurance went down almost $4,000 a year just by replacing the windows.
As of 2020, the NFIP is over $20 billion in debt to the U.S. Treasury.
But it's debt that one government program owns to another government program, and it is wholly attributable to the areas in the program that are not actuarially sound.
The program was never designed to necessarily bring in all the money needed to pay for all the programs, whether that's insurance claims, the grant program, the mapping program, or the floodplain management program. And so the program's actually functioning and operating as it was designed. The design needs to be updated.
In 2012, the Bigger Waters Act changed the NFIP to create rates based on more information than just the flood maps and attempted to overhaul the NFIP to ask for higher premiums that better matched the risk. That law was amended to gradually increase the cost over time, instead of doing an adjustment in just 1 year.
This was a big deal. We were trying to make some progress, trying to rate and price the risk accordingly, but politics set in. And this NFIP program is often one of the biggest political footballs.
We're, I think, definitely taking steps in the right direction to get the program more fiscally sound, but it'll take a number of years once the sound financial framework is put in place, a number of years for us to get to a fully risk-based premium program.
Although it is starting to expand, private flood insurance has been around for a while. In 1983, the NFIP started a partnership with private insurance companies through the Write Your Own program. As of September 2020, 60 insurance companies participate in that program.
The NFIP and FEMA are the insurance company in that situation, but it's not an insurance company from a traditional aspect. It's really more in the case of an application of benefits.
The move toward a more laissez-faire marketplace has continued to evolve.
We've seen a significant increase in market activity in terms of number of carriers offering. So in 2016, you had about 16 flood insurance carriers. Now you've got about 41. The premiums have grown from 150 million to over 500 million in just 4 years. So a lot of activity. Good, what I would call silver lining, is that we are beginning to see private industry enter into this market, and hopefully we can neutralize some of those political headwinds that come along with the National Flood Insurance Program.
TypeTap is an example of that. In Florida alone, there are over 9 million housing units and only 1.7 million NFIP policies. So there's lots of opportunity for private insurance to develop.
We were already in the homeowners insurance business in Florida, and we received many calls from policyholders saying, can you help us? Is there any way you can assist us? Because we're in a situation where we're not able to afford this flood insurance premium. We're ultimately going to have to move from our home. And with the use of technology, we felt that there was a better, more efficient, profitable way to write flood insurance, specifically in Florida.
A lot of private flood insurance underwriters don't rely so much on the flood zone as they do the building's specific characteristics.
With the application of that technology, TypeTap is hoping to attract some homeowners away from the NFIP and turn a profit.
Through our technology, we're able to identify dislocations in the market, and a majority of the cases offer flood insurance at a more attractive price.
Even with the growth of private markets, that I really do think Florida is going to lead the way, and I hope we see expand across the country. We're still going to have a set of structures for which the risk is high, and the concentration of the number of those in a given area is so high that the private marketplace just is not going to be interested in them.
We've got to understand that we're way underinsured in the number of properties that should have it. There is a huge market out there. In the high-risk area, we estimate only a third of the properties have either an NFIP or a private sector flood coverage. There's a market there. So we want to do what we can to encourage the private sector to also take part in managing the flood risk of the nation.
Private insurance companies are also able to insure at a higher rate than the NFIP. That means more protection for homes worth over $250,000.
But that could mean more valuable homes built in riskier areas. For example, the average value of a home in Miami is close to $366,000. That's the same Miami that floods during high tide. A report by Risky Business put $15 billion to $23 billion worth of existing property in that area underwater by 2050.
I don't think Miami Beach is going to be underwater in my lifetime. That's not saying that we shouldn't address it now, because it's not going to get any better. You know, the king tides are going to get worse. If I can't get insurance and quality of life goes down, I'm not a fool. I'm not going to stay here. But I hope it doesn't come to that.
Clearly, without the National Flood Insurance Program, there would have been far more development in the high-risk area and would have been far greater losses without the program. Has the program stopped any unwise development? Of course not. But our floodplain management regulations do save $100 million in losses avoided.
The NFIP also encourages communities and individuals who have experienced multiple flooding events to work on resiliency and aids them if they are considering a buyout provided by FEMA.
It also has to be determined what is still due from a mortgage standpoint, and that home, if not fixed, would have a lower probability of being sold.
You can't convince me that property values have gone down. And you can't convince me that people don't want to still buy homes and live here, because they're buying like crazy.
There's no incentivization to move if you're paying rates that aren't actually based on risk. They're based on political judgment.
Investing in the resiliency required by the insurers can save lots of money and heartache.
You can get into these communities, you can educate them, you can inform them, and help them understand what better building can do. That's really one of the keys. For every dollar spent on being resilient, you save $7 in recovery.
Closing the insurance gap will certainly help protect property owners living in harm's way, but that could just be a Band-Aid for the much larger issue. Both the East and West Coasts will be directly impacted by flooding from sea level rise.
The 7 Ps, and this is something that no private marketplace would ever do, is to put in place a grant program that acquires at-risk structures, particularly those that have had repetitive losses, and says, we're going to pay not just the value of the structure, but buy out the entire piece of real estate and dedicate it as open space in perpetuity.
This is predicted to spark a mass migration inland. The question remains if these indirectly impacted communities will be ready to support the new influx of residents or climate migrants.